Hi, this is Will. Today we're gonna see the two different ETF, and then both are very good um, time for to buy or investing, for the beginners. So first thing is the SoFi Social 50 ETF. That's basically a large growth equity ETF. So symbol is a SFYF, and last Friday it was closed at 33.717 dollars, and then when we see the 52 weeks range, it was $35 at May 28th. So it's about $2 below the 52 weeks high. And when you see the net asset, it's 18 million. So that means a small fund. And then it was the inception date is the 2019, so it's about the 2 years old fund. And when you go down, when you see like here the middle of the May, it go up faster, so it's kind of on moment. So it's the and below is the you can see the like a similar ETFs like iShare S&P 500 and S&P 500 top 50, Motley Fool's 100 index, Russell top 2000 growth, Russell top 200. Those are fund similar ETFs. And when you see the top 10 holdings, totally 51 holdings, and the top 10 charging 49.24%. And when you see the top 10, the first thing is Amazon, second Apple, Tesla, GameStop, Neo, AMC Entertainment Holdings, the Walt Disney, Microsoft, Palantir Technologies, Nvidia. Those are all the the people talking about those things and then on the issues. So that's why stocks go up, and then in the uptrend. And when you see the AI technical analysis, short term, long term, it showed strong. Long term, it showed neutral. And let's just see. So if you want to invest one by one, you can see you can choose one of the top tens, or if you holding all of them, then you can try the SFYF. Okay, and then let me show you another one. Okay, second ETF today is US dividend and buyback ETF. It is for large value equity ETF. Symbol is a DIVB, and stock price $39.12, $12. And in 52 weeks range, in last May 10th, the price was $39.77, which means it's about 60 cents below the 52 weeks high. And net asset is 67 million, and inception date is in 2017. So, and when you compare to the previous one, SFYF, that one is growth, this one is value, and the other one is the growth stock is the issued or on uptrend things, and this one is when you think about inflation, pent up demanding, and reopening, then I thinking this large value equity have more benefit for the situation. And then another thing is it give you dividend, and when in case the price going down, the company gonna buy their stocks, so it's kind of safe, low risk, and then guaranteed the the returns kind of things. So when we going down, it is a 6 months trend. It is you can see the uptrend, right? In case here is a purple line is a 50 day exponential moving average, and then blue line is a 10-day exponential moving average. So the price, stock price is going up on almost on the 10-day moving average line. So we're going down, and then that's a similar ETF. So you can see them, one by one. And let us check top 10 holdings. Total they have 338 stocks, and top 10 charging 24.84%. And then first one is Apple, Microsoft, JP Morgan Chase, Bank of America, AT&T, Wells Fargo, Intel, Citigroup, Procter & Gamble, Johnson & Johnson. But remember, this one is the based on the April 3rd data. So it's more probably this time, now it's June. It'll be, actually today is the end of the May. So maybe their holdings a little bit change. Like AT&T, AT&T have some issue in May, right? They want to spin out media groups. So maybe they may take it out the AT&T, but most of the top 10s looks like this one. And so let's just see that there the chart. So the first thing is the DIVB. It shows the the MACD line is a plus line, but it's downhill. So which means for a while it's gonna have a little bit correction. And but I think the price moving up and down around the 10-day moving average. So it's maybe down a little bit. Then that's the good time to buy, right? And then let me see the other one. So the second one is the SFYF, and then the MACD is now it's a negative. Oh, okay, it's a positive place. So it's a good time to buy. But as you see, this arrow mark is the pivot point high low, which means the red arrow is the high point in the short term, and then the green arrow is the low point in short term. So when price is a little bit correction, and when it shows the green arrow, that time is the good time to buy. And let's compare both of the ETF. So this one is a SFYF 6 months chart, and then let's compare with the S&P 500. So S&P 500 in 6 months it go up 15%, and while SFYF go up 22%. Let's compare with the other one, the DIVB. So DIVB is at the 21.6% up. So both is very near the 22% go up compared to the S&P 500 15%. But as you see, the DIVB is the more, it shows steady, which means the lower risk than SFYF. But when you go uptrend, SFYF it go up more. So that's up to you. And then when you think about both top 10s, probably just some common stocks. Let's see. So both ETFs here, and then when you like here, and then when you see which one, like Apple is both here, and Microsoft here. So when you pick up the individual stocks, then definitely Apple and Microsoft is the outstanding stocks. So that's all for today. Wish you have a successful investment. Thank you.